Hey, did you ever wonder what is it really like to work with a tax advisor instead of a tax preparer? Because the tax preparer only puts the right numbers in the right boxes and says, hey, here's a tax due. With a tax advisor, you actually get proactive tax planning and strategies to save money on taxes. If you want to save money on your profits from your business, what you need is a tax advisor. So in this video, I'm gonna take you behind the scenes and show you exclusive webinar, a recording of an exclusive webinar that I do for our tax advisory clients and things that they do to save money on taxes. I did this webinar earlier this year to kick off 2024 with proper tax planning. And we did this for just our internal clients, and I'm gonna be sharing it here with you on YouTube, because a lot of people ask me, hey Boris, what does tax planning look like? What does tax advisory look like? I never had a tax advisor. What is it really? So I'm hoping that sharing this webinar with you will give you a glimpse of what it's like to work with a tax advisor so that you, the profitable business owner, can save money on taxes. Ready? Let's get started. Hey, thanks so much for watching this video on my YouTube channel. My name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a tax strategy video here on YouTube for you, the profitable business owner. My goal is to completely simplify this tax strategy so that you can understand it. At the same time, you're able to go ahead and implement this tax strategy, or at least take it to your accountant so he can implement it for you. But if you don't have a tax advisor, you gotta get yourself a tax advisor so these tax strategies could be implemented for you in your business. Thank you so much. Don't forget to subscribe if you love the video. Let's go ahead and start saving you money on taxes. Cool. Now, 24 tax planning and updates. Let's finally get to tax planning and updates. Now, everybody over here, your next tax planning meeting is going to be in May 2024. Right now, we're busy with tax season. You can obviously understand. And I think we are like communicating with you almost every day and meeting with you on taxes and so forth. But really, next tax planning meeting will be 2024. For those that are new clients, then you're probably going through the implementation and check-in call, which is still before May 24th. That's going to happen. I'm not too worried about the new clients because your meeting is going to be, your meeting is going to be before May 24th. Excuse me for a second. It got a little bit hot in the office. So next tax planning meeting 2024. And also, one of the things we're going to be doing on your May meeting is implementing the most easiest strategies that are available to everybody. Okay, I showed you the calculation of each strategy. So reasonable compensation saves our clients an average $8,300. Health insurance, that little 2% health insurance adjustment that we do for you that most accountants don't, saves you an estimate, on average for all of our clients was $6,749. Augusta and accountable plan, $4,900. Retirement, $11,000. PTET, I'm going to talk about that a little bit, $7,300. Just recategorizing how you pay your taxes. No extra money coming out of your account, okay? Hiring kids, $3,900. Like, combination just of these basic strategies, okay, adds up to like $43,000 per each client that we had. Now, this applies to all of you. So I beg you and I ask you, please make sure when you meet with my team and my team says, have you implemented this? Let's get this going. Let's get this done. Get it done, because we've seen it happen for our clients, transforms a lot of clients' lives and puts more money in their pocket, okay? Now, of course, these are not the only strategies, right? These are the most basic. Everybody's situation here is different. We saved hundreds of thousands of dollars on taxes for our clients using other strategies that really work in their situation. Like, as we're doing your taxes, things are going to be coming up and things are going to be happening, and we're going to be bringing it to your attention, okay? Now, for those of you that have a self-rental, and for those of you that is doing a cost segregation because you have a rental property, your taxes by default are going to go on extension. If you have more questions about this, please contact your tax advisor, okay? Now, because cost segregation, as you know, we have to call the engineering company. They have to come out to the site, do that accelerated depreciation deduction. Now, I am going to do a next webinar either next month or in 2 months for all of our clients about how to take advantage of real estate tax strategies, especially We have some exciting news in Congress about bonus depreciation, which I'm going to talk about in a second, that could pass. I don't know. So we're definitely going to do a webinar. Everybody that's on this webinar, whether you own real estate, okay, or not owning a real estate, okay, you can attend. Okay. Let's continue with PTET Tax Strategy. How many on this call of all of our BM tax clients know what PTET is? Say I know or I don't know in the chat. Nope. Don't know. Okay. Nope, but I paid it. Yes. I know, I know. It's time, Pengchi, get me on it. Good. Done. Okay, let me explain for you. For those of you that said they don't know, there's two reasons why they might not know. Reason number one, the state doesn't require it. We never put it in your tax plan. Reason number two is that we're probably doing it for you, but you don't know. Okay, so let me explain to you what that means. So very quickly, I don't want to spend too much time on it, but when Tax Cuts and Jobs Act was passed by President Trump in 2017, it was effective in 2018. If you remember, and most of you probably got affected by it, you could itemize on your personal taxes and deduct state and local income taxes. Well, that was limited to only $10,000 after Tax Cuts and Jobs Act. So basically, whatever you pay to your state in taxes and property taxes, you can't deduct more than $10,000 anymore. Obviously, states were outraged, and a lot of states adapted what's called a pass-through entity taxation. If you have an S corporation, okay, if you have an S corporation or a pass-through entity, your state says, hey, why don't you voluntarily pay me a business tax for it? And if you do that, I'm going to give you a credit on your personal taxes. So you're not double taxing yourself. But because you're going to pay me a state tax, a state business tax, you will now get a deduction and not limited to a $10,000 on an itemized return. So that's just a gist of it. We've probably been the only firm in the whole country that I've been vocally pushing this really, really hard on social media and making everybody aware of this. Finally, some accounting firms picked up on it, okay? It's a huge tax strategy for business owners, especially if you're in high income taxes, okay? Such as California or New York. Those of you in California, like, I'm sure my team is doing it for you if it was in your tax plan. Now, this tax also has a deadline. So it's voluntary. Like New York says, hey, if you want to do this strategy, you got to apply for it before March 15th. California says before June 15th. I think Michigan, I'm not sure, my team can correct me. It's either June 15th or March 15th or June 30th. Not sure, okay? Yes, Amy says, I remember now. Thank you, Wella, for correcting. She says it's March 15th for Michigan. Every state is different. Now, my team is going to be doing your quarterly estimated taxes for you every quarter. If you're one of those people that does not like to pay quarterly estimated taxes, but when you see PTET and we ask you to pay PTET, you better get on that because that is going to give you a deduction. Don't wait until next year. Okay, you better get on that because it does give you a huge deduction. On average, our clients saved $7,000. This year, it's going to be even more because a lot of people were late on it last year. Like, for example, any clients that signed up to work with us after June and they were in the states that required election before June, they missed out on it, unfortunately. But we're working diligently, making sure that all the clients that we have, that any elections that need to be done before deadlines, that would be done. Matt is asking about Virginia. I don't know from the top of my head all the states, Peng Chi. Can you comment on Virginia? Is there PTET? Because some states didn't adapt it at all. Like, they don't want it. Like 3 or 4 states. I don't know what's happening with Virginia. Danny says, yes, they do. Shirley says, Virginia have it. They have it. So, yeah, Donnie, we're doing it for you. Just wondering about the deadline. Oh, the deadline, South Carolina has it. I think Well is already taking care of that for you. Matt, I believe we're taking care of that for you as well. Perfect. Hey, thank you so much for watching my videos so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-ups that every S corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. Okay, cool. Any questions on PTET, please ask your tax advisor. I just gave you a really nice high-level overview. Retirement, for those of you that are doing retirement, solo 401k or regular 401ks, the maximum contribution went up to $69,000. Not so much difference, okay? If you're 50 or older, 76,500. Salary deferral, for those of you that have an S corporation and you have a solo 401k or a regular 401k, you are able to put away 22,500 from your paycheck. Well, now it's only 23,000 is the limit. And if you're 50 or older, that's $30,500. Okay. If you're a solo 401k, same salary deferral, $23,000 plus 25% of your salary. I know that most of our clients, by the way, we have it set up on your payroll. If you're one of those that have not been implementing anything with us and you want to do 401k, you're doing it, you haven't connected with your tax advisor, we like actually go into your payroll and make sure this is done properly. So like really take advantage of it. I think average savings per client on the retirement was like 11,000 and change, guys. It's amazing. These are actual savings, okay? So definitely make sure you take advantage of that. Let's talk a little bit about IRS audits. 87,000 new IRS agents is not as scary as it sounds, okay? I did a YouTube video just when this whole thing was announced, was like, I don't know, 6-7 months ago. And I did the whole YouTube video. I broke down all the statistics and numbers and showed you that most of the $87,000 will just be replacing the existing staff, IRS staff that's actually retiring, okay? IRS, yes, IRS is getting more money, yes. Are they going to be more audits? Yes. I've traveled to conferences, okay? They're definitely going to be auditing small businesses, but their focus is really big businesses such as partnerships, real estate, syndications, like, you know, when those developers, they put up the real estate, they open an LLC and they syndicate partners, okay? Those are the main focuses. Are there going to be small business audits? Yes. Am I here to scare you? No. I'm just letting you know that the number will increase a little bit. One of the things they're going to be auditing is S corporations, reasonable compensation. Now, you guys know we're pretty big on that. We always reassess your reasonable compensation. And even sometimes your reasonable compensation comes back to like 90,000. You have really high profits, high distributions. We tell you increase that salary to match the Social Security max, which is like 160,000, or sometimes I even tell you do more. But really, we follow the reasonable compensation report. We always monitor that. Some of you don't want to increase it or whatever that is. You know, there are some clients that go, I just want to leave it as says Boris, leave me alone. All right, cool. We still do the report for you just to make sure you have it for your records. Okay. Schedule C's. A lot of new clients that have been signing up in the past 6 months, they have what's called a Schedule C sole proprietor. Very, very high audit risk. The reason is, and for those of you that are on the call, you had Schedule C's, and I told you, I think, Ken, I took a bunch of your companies from Schedule C's to partnerships. I know it costs extra to file your partnership returns with us, but believe me, it saves you a lot more because you don't go through an audit. Now, the reason they audit Schedule C's is because when you file Schedule C, there is no place to report a balance sheet. And when IRS sees some good numbers on Schedule C and profits, they're like, we don't know what's going on that balance sheet. We need to audit it. Okay. So if you have any business, we'll get it out of your Schedule C. Like, well, Boris, well, how are you going to get it out? We're going to put it into partnership. And if you have a spouse, we're going to make your spouse usually 1% partner so that we can trigger a partnership tax return and file that. Okay. I personally have that as well with my spouse, right? We've got a main business. I say my spouse, she's actually here, Mariana. Mariana, can you say hello to everybody? All right. So I file an s-corp return for Boris M Tax, but we also have another business that we don't keep on Schedule C, just a partnership, right? Where we do all of our marketing and so forth, just kind of keeping that separate. There's no way that thing is going on Schedule C, okay? So, okay. This doesn't apply to family management company. If you've got a family management company to hire your kids and all that stuff, family management company shows very little profit, a little bit of gross revenue, a few tens of thousands of dollars. That's totally fine. Don't worry about that. Okay. Let's see. Bonus depreciation. Is 100% bonus depreciation coming back, guys? Who knows? Let me know in the chat. Is it coming back? Say yes or no. Nobody knows. Yes, please. I know, Ryan. Please, God, please make it come back. So there is talks in Congress to bring back 100% bonus depreciation. Let me tell you why it's good. Okay. Now, before we'll talk about Short-term rental. Yes, Brett, you go. We're going to talk about short-term rentals in our next webinar. But before I talk about 100% bonus depreciation, let's not go crazy about it. And let's first talk about Section 179. Now, bonus depreciation always existed. It was just not at 100%, right? It was like so I think the highest it went up to was like 50% at some point, okay? Section 179 was always available for all the business owners. When you buy equipment, you could always take 100% depreciation deduction. There's certain limits, but most small business owners, especially on this call with me, I know all the business owners that are here, right? They would qualify for 100%. Now, bonus depreciation came in and really helped for vehicle purchases. So if you buy vehicles, that's why people were like, oh, buy vehicles over 6,000 pounds. That's really where it was helping. And real estate. When you used to buy real estate and you used to do accelerated depreciation, bonus depreciation was helping. Now, if you don't do real estate, don't buy vehicles, and you buy equipment for the business, you still have Section 179. Now, Section 179 sometimes takes some planning. That really depends. But really, in most cases, Section 179 drives home for you, okay? 100% bonus depreciation, there's talks, it might come back. It would be super, super amazing if it does. Now, Section 179 versus bonus depreciation planning. This is something you're unaware of, and we're doing this on the background for all of our clients. Sometimes clients like, oh, I want to take bonus depreciation on equipment. Some states don't allow bonus depreciation, right? So, or they allow a very limited number of it. A Section 179 could be better. So we're doing that planning on a back end and always comparing that. So just want to let you know that that's happening on a background as well. But really, we're hoping about bonus depreciation. I'll let everybody know. I'll send an email, blast email to our current clients if that comes back. But this is pretty cool. This is one of those updates. Hey, thank you so much for watching my YouTube video. Just a quick commercial break. If you like what you see, please like the video. As a matter of fact, share it on your YouTube so that you can help other business owners to save money on taxes. I would also appreciate it very much if you subscribe to my video. If you like, share, or subscribe, it really helps me with YouTube algorithm, where YouTube will really push this video to other business owners and they can learn how to save money on taxes using simple tax strategies that I teach with my whiteboard strategy. Thank you so much, and let's get back to the video. Now, I want to spend a few minutes talking about Corporate Transparency Act. Again, let's read this name again, okay? Corporate Transparency Act. What does that mean? So, how many of you heard of things such as opening up holding company, hiding my name, making it so nobody knows what I own? Can you say yes in the chat if you've heard this? Right? Opening up anonymous companies in Delaware, Nevada, Wyoming, not under my name, like whatever. How many of you heard of that? Say yes in the chat. Don't be shy, right? That's okay. Let's go. Let me know in the chat. We got like a lot of people here. Come on, guys. Let's get everyone's participation, right? Everybody heard this, okay? IRS comes out and says, look, you can do whatever the hell you want with the state, okay? You can hide your name on the state records, okay? Do whatever you want, but we need to know what you control and what you own. Simple. Okay, one more time. IRS says we need to know and we need to control what you own. Okay, so the Corporate Transparency Act became effective. I said we need to control. They don't need to control. They need to know. The Corporate Transparency Act became effective in January of 2024. So it's effective now and affects almost every business owner, including almost everybody on this call. Now, it's a massive government database that's going to be containing the identities and contact information of the beneficial owners, meaning to say a human that owns an entity or exercises substantial control over it. And really, the reason for that, for the Corporate Transparency Act, is to combat the use of shell companies that engage in money laundering, tax evasion, terrorism, and other crimes. And who do you think gets affected the most? Obviously, now small business owners have to come out and comply because some bad players did something bad. And everybody over here is now going to need to do this, and it's going to be probably associated with some cost. And we'll talk about that. We're not the ones who are going to be doing it for you, but I'll be discussing that. Now, new and existing owners, guys, listen to this. New and existing small business owners will have to file beneficial ownership information, which is BOI, report with the Department of Treasury's Financial Crimes and Enforcement Network, which is FinCEN. Okay, now who's going to file? If you have a limited liability company, single member LLC or multi-member LLCs, okay, corporations, C-corps, S-corps, limited partnerships, limited liability partnerships, if you own any of that, you're going to have to file. Now, let's talk about how we're going to file that. Businesses that were created in 2024, so since January, if you've created any business since January, you've got 90 days to report it, okay? And I will talk about reporting in a second, okay? You have 90 days to do your BOI report. Businesses that were created before 2024, which is majority of you here, including myself, we have until December 31, 2024 to comply. So IRS says don't rush, but you got to do it before December 31st. Any new businesses that you opened this year, you gotta file it. Now, number of you here, some of you have like many entities, okay? So this applies to all the entities. Now, there are some exemptions. So who is exempt, okay? So large businesses are exempt. Large business is by definition, if it meets those three criteria. It is more than 20 full-time employees. I know we have some of those here. More than $5 million in domestic gross receipts or sales under your prior year return. So if you made $5 million in the USA, okay, on your prior year return, you don't have to do it. And you have a physical presence in the US. Then inactive businesses. Any business that you opened before 2020, that business did not send or receive $1,000, okay? None of that. And it's not owned by foreign personnel, doesn't hold any assets, that's exempt. But I think most businesses that are not active, they're pretty much closed out. And publicly traded companies and nonprofits are exempt. I know some of the business owners that I have on this call, they have nonprofits that they control and that they own. You don't have to file it for nonprofits, okay? Now, most frequently asked questions, and this applies to everyone. So let's go one by one with this. Do you have to file a BOI, which is beneficial owner information? Did I say that right? Did I get that? Let's see. You would think I'd be super prepared for this, right? BOI is, yes, beneficial ownership information. I was right. Okay. Do you have to file BOI report if you own a single rental property in LLC? Unfortunately, yes. And Marie, I'm going to pick on you here. And Igor, I'm going to pick on you. You guys have a rental properties in a single member LLC. Well, guess what? Each of those would have to file a BOI report, okay? Do you have to file 10 BOI reports if you own 10 LLCs and each LLC has one property? Yes. Can a certified public accountant, enrolled agents, or non-lawyers file BOI reports for clients without running up a follow of unauthorized practice of law rules? It's still unclear. There is insurance companies came out, those that represent CPAs and EAs and accountants said, don't file it. We're not going to basically cover you if you file it and something is wrong, okay? Because it does constitute some legal stuff. So that's why I've decided to keep our company clear of that. We're not going to be filing BOIs. Now, we're probably going to refer you to a company, which is CorpNet. Tao, am I correct? It's CorpNet? Yes, Anne-Marie says I'm going to have to call Tao. Yes, we're going to be referring you to CorpNet, which is a company that opens up LLCs and corporations all over the country. They're going to be doing BOI reports. We're going to figure out, we're going to try to get a contact information for our clients. Either it's going to be CorpNet or somebody else. We're still working on who would be the best person to direct our clients to, okay? But please, okay, get this done. I'll talk to you. Did I cover penalties? I didn't cover penalties yet. Oh yeah, we'll get to that. Now, a registered agent's responsible for filing BOI. What is a registered agent? When you open a company, sometimes you put a registered agent, somebody who receives mail on your behalf if your company gets sued. This usually happens. If you are in states like Delaware or Wyoming or Nevada. Okay, so registered agents are not going to automatically file it for you. Do the self-employed have to file? No. So if you've got a family management company that is not an LLC, you're a sole proprietor, you don't have to file it. Okay. Do I need to list street address on BOI report? Yes. Do I need to list my social security? No. Do I need to list attorney in BOI report? Maybe. You can. Must I file updated BOI report if beneficial owner leaves the company? Yes, that is important. You've got 90 days to do that. Do I have to list my minor child in BOI report? No. What criminal will criminals file BOI report? Who knows? I don't know. But that's the latest update. Anne Marie is asking, what's the deadline? Anne Marie, if it's a new business that you're opening up in starting January 2024, you've got 90 days to file it. If it's an existing business before 2024, then you have until December 31st to file it. Okay, penalties. Civil penalties of up to $500 per day that a violation is not remedied. Yep, did I write that right? Yeah. Anyways, $500 a day, okay? Criminal fine of up to $10,000 and or imprisonment up to 2 years. This is no joke, okay? This is no joke. Street address, business only. I did not catch that. Anne Marie, I will send the recording, but I will go back in a second. Let's see. Yes. So, Anne Marie, I'm going to let you take a screenshot of this. But I will send the recording, by the way. And we are going to send a short PDF to everybody about the Corporate Transparency Act. Okay. Cool. Let's take a screenshot of that if anybody needs.